Me and you have talked about a lot. Like it's all about putting the data points together. And you come out of that call, I'd actually say incrementally more bullish, not even just on Nvidia, but on the overall AI theme. Because of the Blackwell delays, if there was going to be one, what I view headwind or black cloud, they put that to rest in terms of yields and any of the issues there. Demand's outstripping supply anywhere from 10 to 15 to 1.
Right.
So when I look at the underlying enterprise demand, not just in big tech, but even like when you look at sovereign and you look at what I think ultimately is going to be the rest of sort of enterprise, this is a story I still view, call it bottom of the first, top of the second inning. I continue to view it. It's LeBron in high school and act.
So you really do still believe it's that early?
We're only 3%, maybe 5% tops of enterprises globally have even gone down this path.
Right.
So it comes down to like when, sometimes I think like it's very easy, like not see forest through the trees, like in terms of like, okay, October quarter, 32.5 billion, whispers 33 billion. But now the focus is more like, this is a company ultimately going toward 50, 75 billion, eventually 100 billion per quarter.
Yeah.
And I think that, to me, is really the trend, not just for NVIDIA, but for what this means for the rest of tech.
In a rapidly evolving world where technology relentlessly pushes boundaries and reshapes how we live and work, a handful of visionary companies are striving not just to keep pace, but to set new benchmarks. Among these trailblazers is Nvidia, a name synonymous with innovation in the realm of graphics processing. This Silicon Valley behemoth is not only riding the explosive wave of generative AI, but it is doing so with a veritable flair that few in the technology sector could have predicted. The stunning rise of Nvidia's shares, which have surged by a staggering 193% in 2024 alone, stands as a testament to its pioneering spirit and forward-thinking strategies. This isn't merely a fleeting trend, but evidence of a profound transition in how technology is synthesized into everyday life and industrial structures. NVIDIA's adept utilization of AI is not confined to speculative ventures or distant futures. It is manifested here and now, in real-world applications ranging from self-driving cars to personalized digital platforms. Yet, as investors eagerly gravitate towards this cutting-edge entity, many are left wondering, has the prime opportunity to capitalize on NVIDIA's success come and gone, or does the horizon hold undisclosed prospects? In an arena brimming with titans like Alphabet, Microsoft, and Amazon, all ardently competing for dominance in the AI sector, NVIDIA distinctively stands out, but for reasons that invite deeper contemplation. The allure of substantial returns and revolutionary technologies is captivating, yet each rise is often shadowed by concerns regarding long-term viability. The murmurs of impending change are ever present, and the unfolding narrative invites us to envision not just what is, but what might lie ahead. Welcome back, everyone, to Investocracy.
And I think now it's going to start to happen, Josh, to that point, the next month, and we'll be in Asia next week. Anyone that's doing the Asia supply chain checks, it's actually increasing in terms of demand over supply. All of a sudden, what starts to happen is next drum roll starts. Hold on a second, 32.5, probably a sandbag number. All of a sudden, stock starts to, what I believe, continue to creep back up. And I believe we're looking $4 trillion market cap for NVIDIA in the next 6 months. I just don't see what's stopping it, given all of the demand we're seeing from hyperscalers, from enterprise. The use cases now are exploding. That's why Palantir, people dismiss them as that. Look at them. Look at ServiceNow. Look what we're seeing with Oracle. That to me is the next phase, the use cases, and Jensen hit on that a bit.
I want to talk about demand. This is you. You said there will be a time that competition from AMD and others ramp up, but essentially a $1 trillion of AI CapEx over the next few years is coming its way, and last night's conference call further confirmed this demand outlook. The stage is set for tech stocks to move higher into year-end, and 2025, in our opinion, as the Fed and Powell kick off its rate-cutting cycle, macro soft landing remains the path, and tech spending on AI remains a generational spending cycle just starting to hit the shores of the tech sector. We continue to estimate for every $1 spent on an NVIDIA GPU chip, there is an $8 to $10 multiplier across the tech sector, which speaks to our firmly bullish view of tech stocks over the next year. So you're very constructive on tech going into year end and heading into 2025. And that multiplier effect, because of the GPU spend, means a lot of opportunity for a lot of stocks, not just NVIDIA.
That's exactly what we really want is, and what we talked to investors about is the multiplier. Because everyone, oh, it's Nvidia, it's Microsoft. No, this now kicks off a cycle we basically have never seen before. And anytime someone puts like the Cisco comparison to Nvidia, show the chart, it looks the same. I covered tech back then. The difference is Cisco, 90% of their customers were essentially leveraged startups, Aethers, and all the CLEX. Who's the customers of Nvidia? It's companies with 1.2 trillion on the balance sheet.
And governments.
And government. So my whole point is that I get the comparison looks great in a chart. Apple's on. You cannot compare what we're seeing here. It's essentially a fourth industrial revolution that's being built out. And I think now it's the next phase. It's the software players, it's the infrastructure, it's other parts of semis. It's names like AMD. It's names like in cybersecurity, how you're going to protect the workloads. So that to me is really where I see everything. That's why I'm so excited about second, third, fourth derivative.
The year 2024 marks a period in which NVIDIA's trajectory seems almost legendary, blending technological innovation with unparalleled opportunities. As AI increasingly forms the backbone of our digital age, NVIDIA's chips serve as essential components, the beating heart driving this transformative wave. Their role transcends that of mere instruments. They are the foundational elements within a grand, intricate network steering today's tech ambitions. Forecasts, such as those from Bloomberg, predict an AI market swelling at a compound annual growth rate of 42%, potentially reaching $1.3 trillion by 2032. These projections highlight not just lucrative openings, but signify a fundamental shift in both technological and economic paradigms. NVIDIA has entrenched itself as the benchmark, the golden standard, within the sphere of AI-ready graphics processing units, commanding a market share that ranges from an impressive 75% to a staggering 95%. As the adage goes, the stock market is a device for transferring money from the impatient to the patient, and NVIDIA exemplifies this virtue of patience. The company's financial statements reveal a compelling narrative, a revenue jump of 122% year-on-year to a formidable $30 billion, powered largely by a 154% acceleration in their data center segment. By delivering powerhouse chip solutions like the H100 and H200 to tech giants such as Alphabet, Microsoft, and Amazon, NVIDIA is not merely fulfilling demand, but defining new industry standards, all while maintaining a gross margin of 76% and reaping an operating profit of $7.8 billion. But before we go any further, if you want to keep up with NVIDIA's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
This works.
Yeah.
It's not just as simple as, oh, how many chips will they sell? It actually ends up looking more like Apple. Yes, they sell a lot of iPhones, but then what else happens on the revenue side after that sale?
Yeah, and I think Apple's a great comparison because I think the big, and let's just compare it to NVIDIA. Many view is, oh, it's iPhone. That's ultimately, what this company does. The biggest part of the valuation change in Apple has been services. That's where I believe that's worth 1.7 trillion.
Yeah.
When you look at NVIDIA, it's not just chips. When you look at the overall platform and architecture, this is essentially companies that okay, we're going to buy the drink. We're going to buy the meal here, but now we're going to have to pay them an incremental 30, 35% every year, essentially in perpetuity on services, as well as on infrastructure and on software.
Right.
That's the difference.
Yeah.
So when you think about it, See, like Intel, the reason Intel, if you looked up disaster in the dictionary, you'd see their ticker, is because they never understood, whether it's the bureaucracy, they've lost the talent, whatever it may be. Jensen always understood the prize was not just about coming up with the chips and the GPUs. It was about the overall architecture. And that's why when you look at what they've done, they've essentially courted it. In other words, this should almost be like going to a baseball game and any meal you buy, any drink you buy goes to the same vendor eventually.
Right.
That's kind of what they've done from an AI perspective. But now who builds on top of it? It gets built on a hyperscaler, Microsoft, Amazon, Google, the apps, ServiceNow, Salesforce, Workday, Palantir. That species second, third, fourth derivative all being built on top of what Jensen.
There's a switching cost too. If you have built your AI services on NVIDIA architecture, it's not as simple as AMD has a 20% cheaper chip. We'll just start swapping them in. I don't think it works that way. Am I right?
It would cost it could cost potentially 2-3x to switch.
Right.
The switching costs are they're just almost impossible. And look, and that's no different than Oracle, Microsoft, SAP, Dell. I mean, you go down the list.
You standardize.
That's what you standardize. And not just that, your IT professionals are standardized. Your users are standardized. The apps are standardized.
Nevertheless, the pressing inquiry extends beyond current successes to sustaining this momentum into the future. Competitors such as AMD are preparing their counteroffensive with rival AI chipsets, aspiring to unseat Nvidia's dominance. But Nvidia holds a potent ace up its sleeve, CUDA. This suite of parallel computing architectures ensures developers become entrenched within Nvidia's ecosystem, creating a robust cycle of efficiency and reliance that dissuades deviation, regardless of costs. As Nvidia rolls out its next-generation Blackwell chips, the company edges closer to ensuring a future governed by speed and efficacy in the AI domain. Yet, before celebrations commence, a deeper analysis reveals potential vulnerabilities. Nvidia's heavy dependence on infrastructure over consumer-facing AI applications uncovers significant risks. Although its current dominance is formidable, it is not beyond challenge. Cloud industry titans who see their bills swell with Nvidia's fees are increasingly exploring alternatives, sowing seeds of shareholder dissent. The horizon's allure is undeniable, yet careful observers detect prudence beckoning amid the brilliance. This presents a vital paradox. Nvidia's successes, while impressive, may inadvertently cultivate competition and opposition. Longtime partners face mounting pressures to innovate cost-efficient alternatives in order to safeguard their own financial health. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
The current cutting-edge standard system that NVIDIA is selling is Hopper, and the next iteration, which Jensen Huang referred to as a step function change above, is Blackwell. And one of the concerns going into the call is that Blackwell was not going to come out during the quarter where people originally anticipated it. And he went out of his way during the call to make it clear to the sell side, Blackwell is not delayed because we're making changes to its functionality. It's delayed because a new mask. What does that mean for the investor who's not an engineer?
I mean, essentially, they've increased yield, and from a technology perspective, they've actually become that much more efficient in terms of how to produce it.
Okay.
So the concern was like, oh, this is a delay. This could spoil the party. And the reality is you're only talking about a few months, and they've actually, through this process, made it better. They made it more efficient. It's made more profitable from a margin perspective as they produce it. Now, they talked about like, okay, billions in the midst. I mean, Josh, this is, in our opinion, tens of billions. And this is just really the start of the next leg of that story.
So pushing the shipments of Blackwell into Q4 does not alter the demand side, doesn't alter the earnings expectations materially. It's just something that happens when you're launching a new wave of technology. It doesn't necessarily hit a certain date on the calendar every time.
And also, the last thing that they could ever do is come out with something too early, bugs or whatever it may be.
Yeah.
They got to make sure that this thing is golden. And that's why, because all the infrastructure is built on it. And then the fact that they actually are going to see some in the October quarter, that put that to rest.
Yeah.
And that's, look, I just think we sit here, we sit here over the coming weeks, over the coming months, and the stock's all-time highs because it's like, I think as more start to do their checks, they realize like, whoa, demand's not just Mag 7, it's actually other enterprises and sovereign. And remember, you haven't even tapped into Europe globally. We're really talking essentially right now. It's much more of a US-centric story with some China outside the sanction.
As the dust settles on this chapter of technological evolution, Nvidia emerges not merely as a dominant force, but as a luminary on the AI frontier. The prospect of investing in a company poised on such an exceptional path is compelling. Nvidia, with its profound global presence, epitomizes both the transformative might of current technology and the vast possibilities of the future. With a forward price-to-earnings multiple resting at a modest 36, Nvidia tempts investors with promises of sustained growth amidst a landscape ravenous for tech advancements. Its present status is fortified and its leadership unmistakable, yet the path it navigates demands clarity and cautious optimism. With projections heralding a future replete with opportunities, Nvidia's valuation and strategic plays suggest it might indeed be the optimal choice for discerning investors. As this narrative finds itself at a pivotal moment, with further developments impending, it is crucial to factor in the long-term implications. As the curtain descends on this segment of Nvidia's journey, the questions nagging at investment strategists persist. Will Nvidia be the keystone of future portfolios, or does it embody the unpredictability inherent to tech behemoths caught amidst turbulent transformations? Such reflections underscore the dual nature of innovation, its potential to redefine the established order, and its vulnerability to unforeseen challenges. Truly, what are your own insights into Nvidia's captivating journey and its prospective ripple effects on the ever-evolving saga of the stock market? Can it maintain its upward momentum, and how will it prudently balance the subtleties of sustained dominance against the forces of inevitable disruption? And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen.